How to make 42% dividend yield per year. Here's how. With Financial 15 Split Corp, FTN.to, which is a mutual fund from Quadravest, from this company here, that invests in these companies here: Bank of Montreal, Bank of Nova Scotia, CIBC, National Bank, Sun Life, Great West. So as you can see, big name companies, big banks and insurance companies, and US banks: Bank of America, Citigroup, Goldman Sachs, JP Morgan Chase, Wells Fargo. This mutual fund invests in these companies here, and then it sells covered calls against these holdings, and that's how it's able to pay their monthly distributions. But they have a condition to pay out their monthly distributions, which is net asset value of this fund has to be above $15. So right now, the net asset value has dropped below $15. So they're not paying distributions on this mutual fund right now. And obviously the reason the net asset value has dropped is because the underlying stocks of this mutual fund have dropped. So net asset value, of course, is the total value of the portfolio divided by the number of outstanding shares. Because the prices of these stocks dropped, obviously the value of the total portfolio dropped, and the number of shares remained the same. So of course the net asset value dropped below 15. So currently they're not paying distributions. But when they were paying distributions, they were paying 12.5 cents per share per month. And in the past 14 years, they've only stopped paying their distributions for 2.5 years, for a 2-year half period. So out of 14 years, only 2 years were not paid in. As you could see, in 2003, they were paying 10 cents, all the way up to 2009, I believe. Yeah, all the way up to 2008. And then it increased to 12.5 cents. 12.5 cents, 12.5 cents. So this stock usually, if you look at the past year, usually trades at around $10. Right now it's at $3.60. And a big reason why is because, of course, the underlying stocks of this mutual fund have dropped, and also the fact that this mutual fund does not pay distributions anymore, does not pay the dividends right now. It just stopped last month. It was paying it. It paid it in November, but it didn't pay it for December, as you can see here. So in the past month, it went from $9 to $3.60, as you can see right now. 6 months, it was 6 months ago, it was trading at, not even 3 months ago, in October, it was trading at $10. So as you can see, if you look at the past 5 years, it's always trading at $10. A few times, just this one time, it dropped all the way down to 6, but then it went back up to 10. And if you look at 2009, you could see that it was trading at 2.95 in 2009. So imagine those who bought it in 2009 at 2.95 and then kept it all this time while it was trading at $10 and even $11 at some point. And then back in 2011, 2012, it dropped again to $5 or $3.71, but then back to $10 again. So most of the time it's trading at around $10. And before 2009, it was trading at $17. But since inception, which is 2003, I would say that it's trading most of the time around $10, as you can see here. Most of the time it's trading around $10. So right now it's at $3.60. So there's a pretty good chance that once the market recovers, once the underlying stocks recover, the net asset value of this mutual fund is going to go above 15. And once that happens, they're going to start paying out the dividends. Most likely they're going to start paying out the 12.5 cent dividend per share. So if you buy this stock at $3.60 now, you're not going to be getting dividends right now. But eventually the market's going to recover. Eventually the underlying stocks are going to go up. So the net asset value of this fund is going to go above 15. Right now it's at 14.62 with the current market situation. So it's not that hard for the net asset value of the stock to go above 15. And once that happens, people are going to want this stock or this fund more and more. So it's going to recover. This fund itself is going to go back up to its regular trading value, which is $10. But you don't need the stock to reach $10 for you to get distributions. You need the net asset value of the fund to go above $15, which isn't that hard. So if you buy this fund at $3.60, and then when they start paying out dividends, you're going to be getting 12.5 cents divided by $3.60, which is your purchase price, which gives you, wait for it, 42% yield per year if you buy it at this price. You're not going to get the dividends right now, but eventually you're going to get it, and you're going to get 12.5 cents per share. And you bought the share at $3.60. So that gives you a yield of 42% per year. And heck, if you want to sell the fund when it reaches 10, you will have almost tripled your investment in probably a year. I'd probably give this a year before it reaches 10. I mean, back in 2009, so January 1st, 2009, it was trading at $3. And then September 2009, it was trading at $11. So from January to September, so 9 months. It took 9 months to recover. During the 9 months, it was already going up, but it took 9 months to reach $11. So that's also another possibility. You can actually make a decent capital gain with this, 3 times your investment. If you buy it at this price and hold on to it for a year, let's say, when they start paying dividends, you'll be getting 42% dividend yield per year. And you can also make a decent capital gain if you decide to sell it. I'm most likely going to do that. I'm probably going to put like $1,000 in this at $3.60. I already bought this stock at $7.40, so I really bought it at a bad price. But I'm going to try to put maybe another $1,000 in it at this price, and then obviously hold it until it reaches $10. On the way, I'll be getting maybe a 42% dividend yield per year, and then when it reaches $10, I'll just get out. This thought actually came to mind is to sell everything I have and just put it in this fund. Currently, I think everything I have right now is probably, last time I checked, it was around $53,000. I think right now it's going to be worth $50,000 with Friday's performance. If I put $50,000 in this stock and then wait a year, I could probably end up with $150,000 in a year. But of course, it's very risky to put everything in one place. But sometimes it's nice to imagine the perfect trade. So the only risk I have with this is a fund that gets renewed every 5 years, and it has the possibility of being terminated every 5 years. So the next expiry date or the next termination date for this mutual fund is December 1st, 2020. So obviously you could see that its inception was 2003, but they've had it all the way up to 2018. So they just keep renewing it because it's such a popular fund. No fund pays that much dividends, and monthly dividends as well. So it's a very popular fund. So it has the possibility to get terminated, but in reality, it just keeps getting renewed every 5 years. So that's the only risk I find with this, is that if they terminate it, Class A shareholders, so the ones who bought this stock here, FTN.to, they're going to be getting the difference of the net asset value minus $10. So right now, you'd be getting more than what it's trading at, $4.62. But you don't know what's going to happen on December 1st, 2020 at termination date. You don't know what the net asset value will be at. So you might get less than what you paid for. But at this price, you're most likely going to be getting very close to what you paid for if they do terminate it. But most likely, they'll just keep renewing it for another 5 years because it's such a popular fund. So that's how you make 42% dividend yield, is by buying this stock right now and then wait until it starts paying back the dividends. And you'll be getting a dividend equivalent to 42% per year. And if you want, you can even sell your investment when it reaches $10 and triple your investment. And this is something I'm strongly thinking about. Now, they've got other products that are in the same position. I find that this one, out of the ones that have stopped paying dividends, I find this one has the best chance, because in the last 14 years, it's only missed dividend distribution for about 2 years and a half. It's got other products that haven't been paying dividends for a longer time, so it's not that guaranteed or assured that it will be paying dividends very soon. So this is another product they have. This is their best performing product. This product has never missed a dividend distribution, and since inception of 2004, it has never missed a dividend distribution. As you can see here, it dropped once in 2009 to $6, which is the same price it's at right now. But then most of the time it trades between $10 and $12. So this is actually another good one. And this one would be paying this one pays at 10 cents per share consistently per month. So if you buy it at this price, you'd be getting a yield of 18% per year. This one's more guaranteed. It's never missed a dividend payment. The net asset value right now for this stock is $16.69. So it's $1.69 above 15. So it's their best performing product. They've never missed a dividend payment. And if you buy this right now, you'd be getting a dividend yield of 18%. And you have the potential to make a capital gain since most of the time it trades around $10. So eventually when the market recovers, it's going to go back to that price, considering that the same amount of people will want this product. So even at $10, you'd be making a capital gain of 51%, which is also a very good possibility. All right, if you have any questions, leave them in the comments below. If you enjoy my videos, please click the like button, share the video with your friends, and subscribe to my channel by clicking the subscribe button below or the watermark in the video. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get between $25 and $250, depending on your deposit. And check out the links in the description below the video to help support the channel. Thanks for watching.